All right, what is up? It is Cowboy, 6:30 a.m., 8:30 EST. About to jump right into the market. It's probably going to be a bit of a slow day. Yesterday was real choppy because we have so much data coming out, and I did talk about this on yesterday's show. Probably not the best week for me to be trading. Kind of broke even yesterday. Got a nice win overnight after a few losses yesterday. So the markets are really range bound, and right now is the time to play such ranges if you are going to dip into these waters. And I might even just stay out of the waters, take a couple days off. Remember, we got Chairman Powell. He's going to be on later today. I'm going to take a look at the time here. Let me see, where's that calendar? There it is. Let's see what time Chow gets on. It says 10 a.m. EST, right? It's going to be like an hour and a half. He's going to jump on, and it'll be about a half hour after the market opens, and who knows what he's going to say. The whole question is whether or not he's going to be dovish or, hawkish or any-ish. He might be nothing-ish. He might just say, hey, we don't know. Like, what he's doing, though, is he's testifying testifying to a Senate committee. And so the things that he says are going to be like hyper analyzed. Every little thing he says is going to be looked at, questioned. Is he hawkish? Is he dovish? Is he going to hike rates? Is he going to not hike rates? And of course, that's kind of the big question. And then what's going to add to that question is later this week. That's Thursday and Friday. You're going to get CPI and PPI respectively. So again, we talked about this yesterday in the live show. No need to belabor it. Just understand that this week, and CPI and PPI are going to be an hour before the market opens, so that would add some volatility. Thursday and Friday might be good days to trade, just not right at 8:30 a.m. EST, either of those days. When I say 6:30, I'm talking about Mountain Time, which is where I'm at. But 8:30 a.m. EST, the CPI is going to come out, and then the market's going to be thrown probably into some kind of tizzy, depending on how close the actual numbers are to the estimate. And if the numbers are not close to the estimate, then that tizzy will last longer. And once the initial jitters kind of get digested by the market, there might be some nice volatility to trade. So Thursday and Friday might be good days to trade. I just wouldn't touch it until after that data comes out. But then like today, tomorrow, I don't know how long those testimonies take. I was unable to find any kind of schedule. So again, it starts at 10 a.m. EST, and that might go for 30 minutes, might go for an hour and 30 minutes. I don't know. But there's going to be pressers, and there's going to be data, and there's going to be, written, and there's going to be a lot of stuff coming out. So every little bit of that's going to throw the market around. And I mean, way more informed people than me don't know what's coming. I don't pretend to know. And when it comes out to this kind of stuff, I don't try to guess. Right. So I think it's unwise to try to gamble on these data. It's just unwise. Do what you want to do, though, not investment advice. Let me zoom in just a bit here, and we'll start taking a look at the market. Now, I did talk about Bitcoin. I did talk about liquidity zones. And as predicted, the price was relatively rage-bound right in this area. And again, I wasn't confident in saying that this was going to be a range. I just was confident that it might be. So a little early to say that this could be a range. But within this possible range, you can see that price did grab this liquidity that was to the upside. So there's just a rejection to the upside. And that makes sense because there was this double bottom. And I talked about how this candle, this one sort of spinning top doji type candle right there, I'll put a box around it. That was the second part of a double bottom, that candle right there. So, and I talked about that like right as that candle was finishing forming. Well, the next candle had a higher high and a higher close and a higher low. That means that this candle right after that was probably going to go up just due to candle theory, double bottom, and then liquidity to top side. And then the price went right up to that liquidity. And this is on the daily. So, the ability to catch that move was there, although that was largely while I was asleep. Not that I sleep a lot when I'm trading. During the week, I usually get about 3 or 4 hours, if that, a night, because I sleep in the afternoon because I trade at night. And that's just where I am in my career right now. But that move basically would have been, I could have entered right after that candle ended somewhere around here. I could have taken a risk, and then of course this was where that final candle actually took place right about here. So maybe like a smaller risk and then a bigger risk to take it all the way up to this liquidity. That move was possible, and I did call that out yesterday as a possibility. Didn't take the trade because I was busy trading Forex, and just, when crypto is so illiquid, it's not something I like to mess with. Not to say it's untradeable, but the probability of wins are rather low. And it's really easy to go back in time and say, man, I could have won that trade, in hindsight being 2020. And that is not the mindset you want to have in trading. It's definitely not that. So let's talk about what might happen. Let's go ahead and review the liquidity zones for Bitcoin. If I can find, here it is, the Kingfisher. Let's let that populate real quick. See if we can get some credits. Yeah, I got a couple. Hooray. Open up the liquidity map, and we'll see where the zones have shifted to. So chances are they've shifted. They shift every few hours, let alone. Yeah, see, look, a lot of liquidity built upside. This liquidity is here. You have some at about 56,500, some more at about 51,000, and some more at 49. So let's see what we got here. We'll go ahead and take this one out. And 56,500 right about here, right below price. And then some more down at 51,000, a little bit lower here. And then we have a lot of liquidity topside around 61,000, which is where it was before, but now it's a much, much stronger liquidity, much stronger than it used to be. And of course, you have some up at 70,000. This means that people went short, right? And their liquidation's right about here. So these are like probably medium leverage trades. I'm going to guess times 10 leverage. They went short. They're thinking price will head down. And if price goes up to 61,000, then they will liquidate. And that tells me that there is a decent chance price will go up to grab that liquidity, just based on the possibility that the market makers will push price up to that area to grab that liquidity. The question is whether or not the algorithms will support such a move, meaning the price action and algos, do they have that possibility of heading up? And I can tell you they do. I can tell you that possibility is there. Would I take the trade? Maybe. It's not a bad trade per se. It's risky because of the time in the market, just what's going on in the market. The risk to reward is not optimal, right? Because I would be taking a trade up to here. It is within my risk tolerance, certainly. Let's see. The top of it is going to be about 61,450. So let's move this here. 61,450. So I wouldn't go all the way up to that top. The issue here is this deep wick on that same spinning top doji that we talked about. Okay, so this indecision candle, I'd have to have a stop below that. It is right at my risk tolerance, right? So will price go up there? It's possible. It might be better to look for a stronger entry than this, right? If I were to, I could get into this. I'd have a deep stop. It'd be a 1-to-1 risk to reward. So not a lot of meat on the bone, but enough meat for me to take that trade. Ideally, I would see this head down a bit, perhaps to the bottom of this range that might be starting to be created right now. We got 1, 2, 3, 4. Technically, I could say this is a range. It's not a strong one, but ideally, I would see this and then a move up. If I could grab that entry, then this trade would look like this right here. And now you're talking a 2-to-1. And the way that probably would happen, not the way that I drew it, but most likely, is that provided that this range continues to be created, then price would go back and forth and then hit right here. And if price were to reject right at the top of these candles, it would add this liquidity most likely. More people would go short. More people would say, hey, price is probably going to go down. And then they'd short. And then I would be able to get a nice entry down here. If I were very confident in this trade, I could add. I could get in right now and just create a position that's a little over a 1-to-1 risk to reward. And then I could go ahead and put on a second trade as it bounced off the bottom of here. Those are all possibilities. And by the way, there is more impetus for price to go down to this 56,000. So it might be. Oh, we can hear V drinking his coffee. We got liquidity right here, so price could easily come down here, and there would be more of a sure shot entry to put an entry right there. But you know me, I like to see more evidence the price will move up after this, so I don't just blindly put entries unless I'm range trading. And if our range trading, I probably would wait for price to actually go down to the bottom of the range rather than simply rely on this liquidity. But if price did go down to 56,500 to grab that liquidity, then of course, I might add to the trade. Okay, so that's a decent trade plan for Bitcoin. And again, we are in that time where Powell is going to talk today, and whatever he says could throw markets into a tizzy. But I don't think it's going to be as effectual to markets as, say, Thursday and Friday CPI in particular, and then PPI after that. I think those are the real G data that's going to throw it all, throw a wrench in the works. But Thursday and Friday, those announcements come out like an hour before the market opens, so we might be able to take a lot of advantage of that. Thursday and Friday might be great days to surf. So, via the Guerilla, how are you, sir?
Good morning, buddy. How are you?
Doing good. Just doing a trade plan. Yesterday was brutal trading, dude. It's just the market's like in limbo, waiting for Chairman Powell to say whatever he's going to say in the next couple of days when he testifies. So I kind of broke even. I had a euro trade that I shared with everybody last night, and I even took like a second deeper entry that I did not share, but it did allow me to kind of recuperate whatever losses I experienced yesterday. So always good to put a cap on the losses and move on. It was a brutal fucking day yesterday. But this is, I did say, like, the whole yesterday morning, I said it's going to be shitty days for trading. But I'm a crackhead, and when I see the algos line up, I take trades. What can I say?
I'm a simple man. I see the trade line up, I take the trade.
Take the trade. Yep. So, yeah, man. So you're here just in time, and we're ready to flip over to the private if you want to go that route.
Yeah, listen, guys, don't sit on the sidelines wondering if this is for you. It is for you. It's one of those things that's going to be the few exploits you have left. The last thing to ever drop is the market. I mean, folks, you got to understand, man. It's like the markets are always in operation. It's going to be one of the ways you are going to be making money during the most toughest times in this nation's history. Be a part of it. Whether the market's up, whether the market's down, volatility is your friend to the end. Join us, algofactory.tech. Trade your job, upgrade your life. Join us or die, boys and girls. Join us or die.
Join us or die.